It's about that time of day again. My name is Joseph James. Today is Thursday, November the 17th, 2016, and this is your nightly newsletter. We're covering crude, S&P, gold, euro, and the FDAX this evening on our newsletter video. Crude is bearish and trading at the lows of a channel. E-mini S&P is bullish and trading at the measured move. Gold is bearish after finally breaking free of the trading range. Euro is bearish and trading through the end of the wedge. And the FDAX is bullish and trading at the high of a channel this evening. But we got another great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow's Friday trading session. Before we jump into our charts, though, and start putting this strategy together for Friday, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget to join the mailing list. I'll send you an email every evening, Monday through Thursday, when our nightly newsletter goes live. Download those charts. How nice is that? Have all those charts you see me using in tonight's video. Have them already on your screen tomorrow. Upper right-hand corner, don't forget, if you're not a member here at School of Trade, I got a free pass for you. Come out and join us in the trade room as a guest. Grab your free pass in the upper right-hand corner. And don't forget, guys, if you're brand new here to the SOT community, we've got a frequently asked questions page on the homepage of our website. Check it out on the right-hand side of the blog and shoot me any questions you may have using our live support button on the website and on our blog. Hope you guys had a great week with us so far. Boy, oh boy, what a great week it's been. I hope this continues into the end of the year. You know, I always tell you guys, the end of the year is always, that November, December, January, February, into the first 3 weeks of March. This is go time for day traders. It's been a fantastic week here, and we're ready to wrap things up tomorrow with Friday, November the 18th. Let's take a look at what we have here tonight. Anything out here tonight? Nope, nothing major on the news calendar for this evening. We, of course, heard from Janet Yellen today, so tomorrow may be a little bit of a reaction Friday. It is a Friday, so, of course, whenever we're thinking about a Friday trading session, I'm thinking get in early, get out early. If you're trading the London session, you get a full day tomorrow. If you're with me tomorrow in the trade room opening up at 8 o'clock Eastern time, the U.S. session kind of gets rolling around 7 a.m. Eastern time. Friday mornings are usually going to be about finished up around 11 a.m. Eastern time. So don't forget, early in, early out on Friday. If you're trading in Asia or London, you got nothing to worry about. If you're in the U.S. session, though, don't forget, end of the day on Friday can be a very low volume. And when I say low volume, I mean low reliability. Remember, at the end of the day, at the end of the week, at the end of the month, traders take bigger risks. They're either trading with quote-unquote house money, right? Either they're way up on the week or they're down on the week, and they're going to use tomorrow afternoon as a way of digging themselves out of that hole, right? So be careful tomorrow afternoon. Get those trades off before 11 o'clock Eastern time. You're more than welcome to hold trades into the afternoon, right? But be careful entering into new positions right after we finish up tomorrow morning session in the U.S. session. Now, with that said, don't forget, tomorrow we got some light news here. We got the PVI from Germany at 2 o'clock, the CPI from our good friends in Canada at 8:30. We got some leading indicators at 10 o'clock. Really a very light news day tomorrow, as you can see here. Tomorrow is actually Yep, OPEX Friday, third Friday of the month, 1, 2, 3. Yeah, absolutely. So tomorrow is options expiration Friday. That means, of course, the E-minis out there, those will be, they'll probably a little bit lower volume tomorrow. We're going to be seeing that S&P chart in a moment. So looking at tomorrow being third Friday of the month, I'm not worried about crude, gold, FDAX, or euro, but I would be definitely thinking about the third Friday of the month for all you S&P or E-mini traders tomorrow, so be aware of that. We're at all-time highs again, at new all-time highs on the S&P, so it may be a bit of a lower volume range-bound scenario, which we'll talk about in just a few moments. All right, got the schedule for tomorrow. Let's jump in. We got crude. We'll go crude, S&P, gold, euro, and of course we can't forget about our good friends at the FDAX. How about some crude? Crude is bearish. The black gold bearish and trading at the lows of a channel after completing its measured move and doubled down this afternoon. The bears are in control, but we're trading at the lows, which tells the sellers to be looking for moves back to previous resistance levels for the most reliable selling opportunities tomorrow. Buyers, on the other hand, need to stay patient because anything that moves higher will likely be seen as a selling opportunity for the bears again tomorrow. As you can see here today, a great example. Boy, I hope you guys with me last night on the newsletter. If you watched the newsletter from last night, you remember me talking about, right, that 2 try rule and then right back down in. Yeah, that's exactly what we got today. Not a huge surprise there. One thing I do want to remind you is we've been watching rollover all week. We are now trading on the CL0117 contract. So make sure, whatever charting software you are using, make sure you move to that January 2017 contract. We did have rollover early this morning. By the time we came into the U.S. session, the January 17 contract was firmly higher volume than the old December 2016 contract. Yeah, there's really no, obviously if you're still trading the 1216 today, no big deal. You just had a low volume environment today. But tomorrow we do want to make sure we're on the 117 contract, right? Contract rollover, remember, is not the same thing as contract expiration. If you go to my blog or my YouTube channel, you can search for that term, contract rollover, and you'll learn more about that specific topic, right? So be aware of that for all the new futures traders out there. Obviously, a bear market here today. A couple things you want to keep in mind. First things first, we have this bear channel, right? This bear channel, as you can see, I want to sell the high of a bear channel, right? That's the goal. The goal is sell the high, right, of a bear channel. So right off the bat, when I see a bear channel like this, I know that we're going to be looking for selling opportunities at the high of the channel, up in the battle zone above the high of the channel. Really anything in this area, right, up here is going to be obviously seen as being an excellent selling opportunity here with this overall bear market. With that bear channel, we do see a bit of an overshoot. That overshoot, of course, expected to give us a bit of an overshoot on the opposite side. So, of course, the bear channel being a very big clue as well. Another clue here, draw that trend line up, connect those two lows. That gives us a wonderful area of resistance. Combine that with the top of the channel. Combine that with the reversal line, which is also the double down at 4602. Combine that with, right, the battle zone. And you can see why this whole area up here looks to be a fantastic spot for bears to stay patient and go looking for opportunities after price comes up and then sell it right back down. Now, this is a pretty strong move, right? This is a pretty strong move. And whenever we see a real strong move in any direction, we know that anything that comes off this low, and we're going to see a couple of these tonight, get some real strong moves today in the markets across the board. Whenever we see a real strong move like this, we always want to be thinking, when the market really starts to run, sometimes it turns into a bit of a short-term trading range. And then really what you want to look for is anything here that jumps up, right back down, right? So watch for a short-term range, and if we do get that range, be aware you're probably going to see some failure opportunities here, jump up, buyer failure, right, and then back down again. We don't know enough about it yet, but if this did end up, kind of trading inside of a range here, in other words, the sellers are here, but they don't want to keep selling low. The buyers aren't touching this because it's obviously a very strong bear market. So it kind of gets that feeling where it's kind of pinned to the low, right? Don't try to sell the low. If we do see that range-bound market, in other words, right, if we don't get the rotation back up and then get a chance to sell this thing back down, if it just kind of sits here and doesn't really go very far, won't get out of its own way, then obviously anything that jumps up will be a great shot there, right, to be sold back down. You got to wait, though, to see those types of trades. You want to make sure that we're not going to see profit taking and have this market immediately start to rotate higher. Bears, beware selling low. Even if we don't get a full rotation back to the high of that channel to sell back down around that 46, right, the 46 half area, right, be aware of that possible trading range. What if you want to be a bull right now? What would you be looking for if you want to be a bull? If I'm going to be a bull, I'm going to need to see something like this. I'm going to have to see some consolidation, a strong move higher, and then hold that pullback. We're going to have to first start out by seeing a new higher high and then hold that pullback. If I can get that pullback to hold, the buyers will take control, and then I can look forward, right, to buying. Just make sure, though, if you're going to buy this thing, don't buy it into the high of the channel and then get above the high of the channel, and that will at least be your most reliable spot there above the high of that channel. It's not going to be easy for the bulls because, again, with such a strong move lower, it's going to be difficult really for anything here. I'm looking at This reversal line here, of course, being kind of the kind of lowest point here where sellers are going to start looking for it, but really anything here as this price goes higher. Watch out for a short-term trading range. If we do just keep spiking lower, again, watch for traps. We're going to see a bunch of these tonight here. You'll notice here, though, as price moves lower, good example right here, right, as it kind of jackknifes lower, you'll notice what happens, right? As soon as it breaks above that high, sellers come back in. We saw another one right here, right? As soon as it breaks above that high, sellers come back in. If it does keep just jumping lower, don't sell low, wait for traps. If it turns into a real strong bear market, just don't sell low and wait for those trap highs and buyer failures as this price goes higher. Alrighty, how about some S&P? The E-mini is bullish and trading at the measured move and fresh new all-time highs this evening, which tells the buyers to follow the trend higher, but avoid buying into the high until we see proof that there's at least enough interest in reaching a possible triple measured move up around that 89.5 area. The most reliable buying opportunities tomorrow will likely come at prior levels of support, which will allow the bulls to quote-unquote buy low and take advantage of the counter-trend sellers getting caught on the wrong side of the market. We have to assume at these all-time highs, there are going to be some traders out there that say it can't keep going any higher. Okay, apparently they're new around here because we've been making new all-time highs here, right, for quite some time. So there will be some sellers who try to sell into this high. If you're a buyer, there will be a time when it looks like the sellers are trying to reverse the trend, and that's when you want to, right, that's when you want to be buying into their failures. Sellers need to be careful tomorrow. Any pullback right now will be seen as a buying opportunity, so they need to stay patient for a strong push lower that can hold a pullback before they consider trying to sell into this strong bull market. Now, there could have been a few different opportunities here or a few different ways of looking at this. I have this drawn up as a bull wedge. This bull wedge, in all reality, it could be a bull channel. It really gives me such a tremendous target. I mean, this wedge, the target is always where that wedge combines. So you can see here, that wedge target is putting me up around that 21.93. I just don't believe we're going to see 21.93 tomorrow, right? I have a hard time swallowing the idea that we're going to see 21.89.5 tomorrow, right? This is the S&P and we're at all-time highs. As of this week, we've made little quarter point, little half point new higher highs. I'm not expecting to see a triple measured move. I will be open-minded to it. If we see proof of it, I will definitely buy up to it. But at the same time, though, I'm not going to hold my breath for it. I will wait for proof. Now, what that proof would be a strong enough breakout in order to get the moving average up above those all-time highs. It's not going to be easy because as we make new all-time highs, smart buyers will take a large portion of their profit off the table, right? This is kind of trading 101, right? Buy the dips, take the majority of your profit at the high, leave a runner if you wanted to, but take the majority of your profit off the table. That way you can lock up your gains. So if we do see, for some reason, if there's a short covering rally at the high, right? Price punches higher. The one thing you want to see though is to even consider buying a pullback above that measured move at 85.5, which is also the new all-time high. I've got to get that moving average up above. Even if I have a very hard time swallowing the idea of buying a pullback right above all-time highs, what I'll be a whole lot more inclined to do is look for a trap. Rather than take that pullback, look for a trap low, because you're going to get a lot of traders here who get kind of wrapped up in that, and that's going to be, whenever we're looking at a chance to buy high. I realize we're in a bull market, and buying the high of day is not a bad thing in a real strong bull market. But at all-time highs, we have to be a little bit more careful. It's much wiser to be buying a big dip down around that 80.25 area, much better value, right, for your trade than to try to buy high. So take some extra precautions and don't look for that breakout pullback. Look for what I kind of call the okie doke, right? The breakout pullback that traps low and then allows us here, right, to basically trade into the sellers who are trying to call a top on this market, right? So that's what I'm looking for as this price goes lower. Like I said earlier, tomorrow being OPEX Friday here, and really this is the only market that I'm worried about. I'm really keeping an eye on this area right here and where this may end up being a trading range for tomorrow. One thing is for sure, we definitely have a bull market. We definitely have a bull wedge. You could call it a bull channel if you wanted to as well.